Welcome back. The Reserve Bank has made personal loans pricier by changing rules. On Thursday, I've been speaking with Chairman of SBI, Dinesh Khara, Mr. Umesh Revankar of Shriram Finance, Virat Diwanji of Kotak Mahindra Bank, and Krishnan Sitaraman of CRISIL. Gentlemen, thank you very much for your patience. Mr. Khara, two very quick questions on possible impact on asset quality. What the Reserve Bank seemed to be indicating is that people are taking one loan from one NBFC, paying another because they are overdue or over-leveraged. There is this round robin going on. So if the penny drops, do you think there can be some increase in GNPAs in some quarters?
See, the issue involved is when it comes to the NPA status, I think different lenders are having different practices in terms of evaluation of the credit risk.
For the system as a whole?
For the system as a whole. So that is something which is the deciding factor here. But I would say that since, the NBFCs, banking system, all are subject to oversight by RBI. So there is a very conscious effort on the part of the Reserve Bank of India to ensure that the system for evaluation of the risk should be robust. That is the effort. So I think, yes, of course, when it comes to, somebody is trying to pay off the loan by raising another one, which is more like a Ponzi scheme. Normally, now the system is quite cognizant of the fact that they look at the EMI, NMI ratios. They also look at the loan to value, etc. for the assets. So I think the practices have streamlined quite a lot, have been strengthened quite a lot over the years. And all lending institutions are quite mindful in terms of the quality which they are underwriting. But of course, at times, if at all they are diluting those standards, they need to have very strong collection mechanism on ground. So this is how it really works. So I don't really expect that it should have those kind of ripple effects and could have any kind of scare for the system overall.
Okay. Similar question to you, Mr. Revankar. One, can there be asset quality as over-leveraged borrowers find that no one is giving them a new loan? And secondly, will NBFCs have to take a little bit of hit on their margins? Because you're already charging maybe some people 18, 20%. How much more can you push it up? So margins, asset quality.
Yeah, first of all, I feel the NBFCs will be very cautious about dropping their margins. They will try to maintain the margins. And that's so because that's the cushion against any kind of increased credit cost. That's one. And as far as the multi loans to individual is concerned, I feel it is a phenomena that is happening mostly on what call digital lending, where we do not know the end use of the loan. So that is somewhere I think that area is which I feel both NBFCs and the bank need to be careful, because some of this loan can be on the book of NBFC and the bank. And we need to be carefully address that. See, I think most of the established NBFCs and banks are mindful of it and they have a reasonable control on that, because today everybody is collecting the data from the bureau. So I don't think there is a scope, but still there could be something. So we do not know. And I feel personally there may not be much, but if RBI is talking about it, they must be having certain data on this, and they must be talking because of that. So we do not know what has made RBI to be extra cautious on the same.
Okay. Well, a similar question to you, Virat. I'm not just asking for Kotak Mahindra Bank. As an observer of the scene, will the penny drop in terms of fintechs? Will it be, equity derivative volumes have been going through the roof. So are you expecting trouble in any such quarter in terms of higher asset quality problems?
Look, at this stage, it does not appear so. But in terms of the way in which the lending has happened through the fintechs, and where perhaps more of the algorithms are being used, perhaps that's where, and that's a segment where the lending less than 50,000 has been growing, is an area which is concerning RBI, because there, what you call, even the cost of collection is prohibitive.
Yes.
So from that perspective, that segment will certainly have, everyone will become extra cautious on those ticket sizes.
Okay.
That is one. The second thing is how much of it is used for consumption. We were discussing this earlier. The consumption loans taken through a PL route will certainly see a decline in that sense, because the lenders will be more cautious as to for what purpose this loan is being taken.
Yeah, that's the point, because we just spoke with the Blue Star managing director, and he said that 50% of the ACs are bought on a BNPL kind of route, that is on credit. So, I mean, if it's an expensive credit, will that hurt? Actually, running out of time, can I have two important takeaways each from all of you? Krishnan, two important takeaways in terms of impact.
Yeah, I think there will be some increase in capital requirements, but that will be very much manageable for the banking sector. They're very well capitalized today. On the NBFC side, there may be some divergence with, say, the vehicle finance having very marginal increase, and entities in personal loans and credit cards are somewhat higher increase. But there again, the capitalization levels are strong. Again, the other key aspect is this is a measure to proactively recognize potential risks and have adequate internal surveillance mechanisms and guardrails in place, so that it's a proactive measure against future potential risks.
Okay, I'm being warned out of time. So, Mr. Khara, you have the last word, sir. Do you think this is the first of more steps, or this is it?
No, I think the kind of concerns which are being expressed by Honorable RBI Governor, so this was one of the major area of concern, and it has been appropriately addressed. And I would only say that I think as the lenders perhaps were all geared up for this kind of an event to happen, and in, for quite some time. And eventually it is for the overall good for the system. So I would look at this measure like this.
Okay, one very quick word, Virat. Boards will become very active. They will ask you all more questions, you think?
Of course, because this will certainly have an impact on the profitability, and hence how much of this increase in price will be able to pass on to the customer. Because if you can't reprice your loan going forward, perhaps the impact of this increase of additional capital will certainly have an impact on the ROEs of the financial institutions.
Okay, I'm sorry, completely out of time, but deeply grateful to you, Mr. Khara, Umesh Revankar, Virat and Krishnan Sitaraman for obliging with your comments and your analysis. Much appreciated. So the key takeaway is most of the institutions are well capitalized, but because they have to pay for that extra capital, loans are going to get pricier, and therefore some consumers may not be able to afford it. Therefore, consumption will have a bit of a setback. And as Virat says, if something is not profitable, banks will not even go there to the same extent. So you should see some kind of fall in consumption, reduction in consumption. That's all we have time for this edition of Indianomics. Thanks much for watching. Do stay tuned. Much more is lined up for you.